Hey traders, John Howell here, and in this video I want to just go over and Harry Dent just came out with a video. Now whether you like Harry Dent or don't like Harry Dent, there are some things that I really have learned from Harry Dent and I'm very grateful for that. Yes, he's been off, yes he's been wrong, you know, we're not always right and so on and so forth, but there's a lot of things that he does come out with that I like, right, that I have learned a lot from Harry Dent. But he's also agreeing with Ray Dalio. Ray Dalio and Harry Dent right now are coming together saying the same thing, and I want to mention more about that. So what I'm going to do right now is I'm just going to play the Harry Dent video, and then I'm going to come in with my opinions of where I see things in the Ray Dalio situation, and so on and so forth. So let's get straight into the Harry Dent video, and we'll go from there.
Hi, Harry here on July 24th, Friday. Now, you know we were looking for potentially a top of all tops, a major top, the top this week. A number of indicators that I put out in my early edition of the HS Dent forecast, which came out on Tuesday. We're saying we're looking around 21st to 23rd was the optimum time for a top, might stretch a little longer. Well, from the 21st to this morning, the 24th, the Nasdaq has fallen 600 points approximately. That's a big deal.
Now I want to stop straight away there. The one thing that I do agree with Harry Dent here right now is that if you actually look at all the tech stocks right now, we're in a massive bubble. Now, whether that bubble does burst by say a 50% correction, and I'm calling about just a 50% correction of the entire move up with the whole Nasdaq. And that's actually possible, right? And that's just going from the March lows when the whole virus situation happened to where we are right now. That's just a 50% pullback from there. Whether we just do that and continue up from here, or whether this one last, you know, the whole what we call blow off top. What's happening right now in the Nasdaq, Apple, Facebook, you know, Google. These tech stocks, especially Apple. Apple is probably one of the biggest ones, and Microsoft. Apple, Microsoft, obviously, and the Nasdaq itself. You know, I truly believe that we are in the midst of a blow off top, right? It's like, how do you qualify a blow off top? Something that's pretty vertical, you know, and if you look at the Nasdaq chart, you'll be able to see that it's been pretty vertical. And in every single bubble situation, what does it have in common? It's bubbles, right? Look at what happened with Bitcoin. It went vertical, and then guess what happened? And then it retraced 100% of the bubble. Is that exactly what's going to happen right now with the Nasdaq? Now, moving over to what Ray Dalio said. Ray Dalio right now, which again, you have to respect him. I respect Ray Dalio so much. That Ray Dalio has also come out and said, right now we are going through the shift. We have started the next downturn. And right now, I believe that dead cat bounce, or that rally, like, oh, everything's back to normal. If you look at the market cycle calendar, you'll be able to see, you know, where we're getting that bounce now. It's like, you know, everything's back to normal, and then suddenly we start to move down again. So I want to preference this video here with that little frame of what other people are saying. And guys, this is just what I think. Let me know what you think in the chat box below. Do you think that we are at the top and we're going to start to see a massive downturn, or we're gonna continue this bull market, like, you know, like the Fed and Donald Trump is gonna say, where Ray Dalio is coming out and saying this is the top now for many years to come. Even Harry Dent is saying the same thing.
The bigger deal is the Nasdaq is leading this correction instead of the other indices, which it used to be more the small caps would lead on the way down. Now they'll do poorly in the end as well, but I expected the Nasdaq to lead this because the futures traders, that volatility index on the Nasdaq that we were talking about in the August issue, was saying they're the most skeptical of the Nasdaq and Nasdaq 100 right now. So this is looking good so far. Why is this top important? Obviously, for us to see this and be able to get out of a bubble near the top. Even we got out earlier this year. This is all of these have been good selling opportunities, and profit from this in the downturn, because there is a pattern to these downturns and it continues to follow it. This top is coming 4 months into the rebound from the 40% crash, right in the middle of the tech wreck in 2000, 2002, and the big 90-year cycle bust in late 1929 to late 1932. So those first bounces. So it is following a pattern, and the next pattern is
Now, one thing that Harry Dent is talking about here, which I totally agree, and even Ray Dalio talks about this. If you've got Ray Dalio's big debt crisis, you will see that one of the best things that the smart people do is that they go back in history and they say, okay, what happened in the past? And Ray Dalio does this as well too. So that's what Harry Dent's talking about here. He's just trying to look for the analogous situation, which is just a big word for similar situations that's happened in the past. And Ray Dalio talks about this as well too. What has happened in the past, and then the cause-effect relationships based on what happens there. Because if you can see what happened in the past and what was the cause, what they did, and then what was the effect, what actually happened, and then if you bring it to the present moment, if you can see the situation, and then you can see the cause, what they're doing, and then what the effect's likely to be, you can start to sort of, see the future, really. And that's what Ray Dalio has really done. Again, that Big Debt Crisis book, I recommend you getting it. Go to Amazon or something like that. I've actually got the downloadable version. You can get it for free. And I've also got the physical version of it as well too. And guys, this is some of the best things that I have learned from some of all my mentors out there. Even Mike Maloney, right? Watching his Hidden Secrets of Money. What is it all about? It's all about just going back over time and, going through his Hidden Secrets of Money. It's talking about what? It's talking about how history is repeating itself again and again and again and again. And, and one of the best things that we can do if we want to start to see the future, I think someone said, I forget who it was, that the further we can look in the past, the further we look in the past, the further we can look in the future. And Ray Dalio, again, the same things happen. If you see what he says in his interviews, the same things happen again and again for the same cause, which means what they do, effect, which means what happens, situations. You can start to really put the pieces together, guys. So even though this may be a downer video, it's not, because guys, if you buy put options, you can short the market, you can get ready, and there's amazing opportunities. When the actual whole virus situation happened and the market pulled back, there was amazing opportunities through there, with the way I trade. It doesn't even matter what I trade, right? It's like, if you educate yourself on what to look for, you can do really, really, really well. So they're all coming together here, guys. And this is just not about Harry Dent. This is Harry Dent. This is Mike Maloney. This is Ray Dalio, all coming together. And that's what he's talking about here, about history repeating itself. And the more that you personally, guys, can study this. Now, whether you like Harry Dent or not, just study what he says about the cycles, right? Because you can learn so much. Then you go to Ray Dalio and study all his material, and then Mike Maloney. And you're not looking for the quick, get rich quick thing. You're saying, okay, what's likely to happen over the next 10 years? What is the next 10 years so I can position myself for the biggest wealth? Because where millions of dollars are going to be made over the next decade is not getting in and getting out really, really quickly. It's positioning yourself for the next, what's likely to happen over the next decade, and riding that wave. That's where the big, big, big money is made over the next 10 years.
As things go down for the next 2+ years until we bottom. And again, today, if I had to call a bottom on this whole downturn, I would call it around December 2022, just by past.
So he's saying December 2022. And, what we're looking at right now in the whole situation with the job keeper, the job seeker, and all this stuff that the government's doing right now, we're seeing that we're seeing low interest rates. We're seeing inflation starting to pick up a little bit as well too, which may have to cause the government to actually raise interest rates, because now they're like, oh my goodness, that may or may not happen. We're seeing people that have investment properties. They're probably having to kick a lot of their renters out because they're not even paying their mortgage or paying their rent. And people that have been laid off, there's going to be more people that have been laid off. There was an article recently where Ray Dalio came out and Bridgewater is starting to even cut jobs. And that's not only Bridgewater, that's everywhere. That's Boeing. There's so many people out there. So what we're seeing right now is not, everything's back to hunky-dory. What we saw in March is just a little baby, right? What we're likely to see over the next couple of years is going to be the adult.
So yes, we can take advantage of this. And I'm telling you, I'm looking at the chatter out there in the news. I'm not seeing many people talk about this as the top. There's been some billionaires and big traders warning generally. So this could be important. I have an ulterior motive on this. I want this damn bubble to burst. This is the greatest mirage illusion.
Now, I think personally, I think Harry Dent wants it to burst so it can finally be right. That's, because he's been saying the market's going to crash for a long, long time. We know that, right? But the whole situation is, I think he just wants the market to crash. See, I told you it was going to happen, but put that aside, I really have learned a lot from Harry Dent, and if you can put that aside of him being wrong in the timing and so on and so forth, you can really look a lot of what he's saying and just take some stuff you like from him and take the stuff that you don't like from him, and then really make it your own and make some good decisions based on what he's saying. Ray Dalio and also Mark Maloney, these other guys are big macro investors, and you can start to see and all of this is just taking the information you need to help you make better decisions for yourself.
Created something for nothing in history. We've got Ray Dalio, I'll show this next week, has a great chart showing every time private debt peaks and starts to deleverage, that's when they started to do minor money printing, QE, in the early to mid 1930s. Well, this one's off the charts. And we delevered then big time private. We're not deleveraging this time, and I expect that to happen in the next 2 to 3 years. We finally delevered this debt. We finally delevered these bubbles because they are totally distorting our economy. What has happened here, and make no mistake about it, and I and many people like David Stockman have talked about this for years and years now, that central banks took over the free market capitalist system. We will no longer have free markets. We will set short-term and long-term rates. We will push markets up. We will not let markets go down. We will not let the economy go into a recession or depression and deleverage. This is insanity. This is the worst thing ever done in economics since the South Seas bubble, and that was minor, only affected small amounts of rich people.
So Ray Dalio has talked about this. We got the whole modern monetary three. I think that's what they call it, right? Where you basically have the two different levers in helping the economy. Firstly, it's the interest rates, and then it's quantitative easing. And if you use both of those to really help the economy, then that's what's what's the word for it? That's what's going to help the economy, right? When it goes through, when we go through peaks and valleys, when the market goes through recession, they drop the interest rates. That helps boost the markets. Then that's not as effective as more because interest rates go to zero. Then secondly, they start to have to, when they do that, then they have to start to use quantitative easing to actually help as well too. And then now that's the lever number one is interest rates. When that stops working, level number two is 0% interest rates. That's what's happened over the last 10 years, and quantitative easing. And then when that stop happens, then, and Mark Maloney talks about this as well too in his hidden secrets of money, is that then lever number three, I think they call it modern monetary three, is now where the government is just coming in to buy everything up. But with all that being said, there's a default to that happening. What is that? That is your dollar going down, people losing confidence in the dollar. That's devaluing the dollar itself. That's going to cause massive inflation moving forward. Whether it's right now, we're seeing inflation right now, but we haven't seen nothing yet over the next couple of years. And the prices that are going to start to do that. Even if you look at, say, some of the actual markets, right, like corn and all these other commodities out there, they're starting to go up in price big time. Why? Because that's starting to see inflation on the actual ground. And then we haven't seen nothing yet when it comes to inflation because of what the government's doing. So yes, the government may be coming in to buy everything up, but there's a side effect, right? The cause is what? Government buying a lot of stuff up. They're buying everything up. They're not going to let it crash. The effect, what's the effect? So the cause is government buying a lot of stuff up. The effect is what? Inflation is going to start to pick up, which is bullish for anything you see which is inflation based. So, if you look at, say, something like, you look at stocks that are based on retail, they're probably going to be the best stocks moving forward over the next couple of years. Why? Because inflation means better prices for retail outlets, because that inflation prices is now actually helping boost up prices. It's already happening right now in their profit margins. We're seeing massive profit margins happening through there. So all this stuff is happening right now. And so the cause is printing money. The effect is a massive inflation. Now, when that massive inflation happens, devalue of dollar, inflation of happening, what is going to be, the bust is going to be happening from obviously stock market point of view and so on and so forth, because there's only so much the government can do there. But then the inflation, especially when they have inflation and the inflation starts to pick up, that's when you're going to start to see potentially interest rates go back up again to try to counteract that. Or either the government come back in, because that's what they've done in the past, the government coming in and start to say, we are now putting a temporary freeze on asset prices, because now the asset prices are going to go up too much, and now the asset prices are going to go up too much, which simply means food prices, energy prices, and so on and so forth, our living, which is now making the dollar. So we're getting a devalue of the dollar, we're getting inflation of prices, and that's what's coming here, I believe, over the next couple of years.
So I want this to happen so we can restore free market capitalism. This downturn with such income inequality is also going to restore democracy. So we've had basically special interests take over democracy in this bubble boom, and central banks in the late stages take over free market capitalism. We need these things to come back stronger than ever. The internet, this bottoms up world, even the potential of cryptocurrencies and blockchain, more importantly, allows us to have even stronger bottoms-up democracy, free market capitalism, the invisible hand. If we can just get these damn douchebag central banks out of the way, get out of the business of manipulating the economy and thinking they're God and smarter than the invisible hand and the collective intelligence and innovation and spending habits of people who actually drive our economy. So I've got a big ulterior motive here. I want this crash to happen. It is the greatest opportunity to expand wealth of any time in history, as the early 30s particularly were, on this 90-year cycle, which is the primary cycle. You look at the stock market since its inception in the late 1700s and stock exchanges, the only thing that stands out on that long-term chart is the 90-year cycle and crash. The other thing that stands out particularly since World War II and the first middle-class generations and then the giant baby boom is a 40-year generation cycle. That 40-year cycle is bottoming 2020 to 22 to 23, and this 90-year cycle is hitting late 2019 to late 2022 for the markets. This is a bigger convergence of these cycles than even the early 30s, and then the other 90-year cycle, 1836 or 37 into 1842.
So one thing that Harry Dent is talking about there is, once again, cycles, and what a screenshot to pause Harry Dent on, eh? What Harry Dent is talking about there is cycles, and as I've been mentioning throughout this whole video, is that everything is cycle based. Everything goes. There's cycles to everything, and so I think if we can start to see where are we in the cycle of what's happening right now, instead of just trying to make that get rich quick thing, if we can just step back a bit and say, okay, where are we right now in the big cycle of things? Where are we likely to go in the next couple of years? What's likely to happen over the next decade? And how do I position myself so I can start to build wealth through this situation, even though inflation's going to happen and all that sort of stuff as well too. And that's the reason why, guys, I believe that even over the next couple of years, there's going to be amazing opportunities to do really, really well, because when the stock market starts to continue to go down and we start to see some more downward movement through here, what's going to happen is there's going to be amazing opportunities, but then on the flip side is that think about it here. If the government is now going to be squeezed with the whole printing of money, then what's going to happen is that there's going to be a big pressure. There's going to be this, and Ray Dalio talked about this here. It's going to be a slow squeeze on government-assisted programs, which is healthcare products, which is pensions, liabilities, and government jobs as well too. So even teachers, doctors, all these government jobs out there that the governments pay for, all those jobs are going to be really, really, really bad. And you look about this if you look at this from a big long-term cycle, and Harry Dent talks about the 90-year cycle, the 40-year cycle, here in Australia, for the last probably 20 or so years, all I've heard about, especially when I was growing up, right? I was always looking to get a job in the railway lines, because they go, "Oh, if I get a job and if I learn how to drive trains, it's a government job and it's easy and I can get pay, I can get it's secure, and all this sort of stuff. And it's from the government, so it's a very, very secure job. It's a government system secure job." Well, everything goes in cycles, right? What was good is now not as good, and what's really, really, really bad is probably going to start to become good. We see that in property markets all over. Like, for example, probably about 10 years ago, here in Australia on the Gold Coast property got hammered 60%. Now, what did one of my mentors do? He went up and started buying $1 million mansions that were worth $5 million. Now they're worth $1 million on the water. And now that $1 million mansion that he bought that he now lives in is now probably worth $5 or $6 million 10 years later, maybe 4 or $5 million. But you can see he easily 2 or 3x'd his money by just understanding the cycle of things. And so, like, especially once again here in Australia, where I said the cycle of things is over on the other side. I'm in Sydney, so on the other side of Australia, which is Perth, Western Australia, we see Perth has been in the dumpsters for 10 years. So what do you think is likely to happen in that situation, in the cycle of things, over the next 10 years? Perth is probably likely to do what? It's probably likely to go through another boom, because it's just the cycle of things. So as we can see that if we can start to look at life and look at not just as the markets, but everything we do in life, where are we in the cycle of things so we can understand? So for example, if I'm using this as an example with cycles, with me and my private clients, at the start of this year, January and February of this year, as I'm doing this recording, we had phenomenal month. Me and my private clients, we came out of the gates. It was so many trades and there was so many successful trades, and it was just a phenomenal month. And I said to my private clients, I've seen this before so many times, that when you go through trading opportunities and you see a lot of good opportunities and you're doing really, really well, I told them that get ready for a period where there's not going to be many trades. And guess what happened? As that happened, the next month, March, as the market was coming down, that there wasn't a lot of good, amazing opportunities out there. So we had to sit on our hands. Now, there was a couple of good trades there, but there was nothing like January. January and February came out of the gates big time, and it was amazing, absolutely amazing. We did so well. But I told them, get ready for a period of it being quiet. And then for a whole month, it was quiet. So I had to get my clients prepared for that cycle to kick in place. And then it was quiet for about 4 weeks or 5 weeks. And then I said to my private clients, it's been very, very quiet, but be patient and don't be trying to rush into crap trades, because you just got to wait, because it will start to pick up again. And when it picks up again, we're going to start to see amazing trades, and you need to be ready for those amazing trades when they do come. And it was literally like the next week after saying that, for the next few weeks or more, we started seeing all these amazing trading opportunities that to do really, really well, and it picked up. And then just recently, we had 2 amazing trades. I got out of one trade, did have 1,000% profit. Another one had a 600% profit, and just a couple of amazing trades there as well too. So as you can see, that I'm trying to help you guys understand as well too, that if we can just look at our lives as cycles of things, like whether I'm trading the markets or whether I'm looking at the economy, and then it's like, okay, if I can see the cycle of things and not get so involved with what's going on right now. And this is one of the biggest mistakes that I have made so much in my early 20s, is that I would always be involved with what's going on right now. So when the market was crashing because of the whole virus situation at the start of the year, the old Johnny would say, oh my goodness, the market's crashing, and I would go with that instead of just looking at it as a cycle. Now, the new Johnny didn't do that. The market crashed, and what did I do? I started buying options on Apple, on the SPY, and a few other stocks. Now, I had a few losses out of those trades, but then I had a few big wins. Nice win on the SPY. I had a 230-something% profit on Apple as well too, because I bought it on the massive crash, because I just saw it was going to be a cycle of things, and we're going to get at least a strong bounce out of this, and we're going to see it because I just saw it as a cycle of things. Now right now in the cycle of things, what are we getting? We're getting a massive boom in Nasdaq and the tech stocks. Guess what most people are doing? Most people are just saying, oh, well, it's going up, so it's going to keep going up. And see how a lot of what we call the sheep or herd mentality is doing you wrong, because once you understand the cycle, what is doing really, really, really good right now, like Bitcoin was doing at 17,000, is probably when something's euphoria, something's amazing. Guess what? We're probably going to have a bit of a pullback there. When something's really, really, really bad, we're probably getting ready for a bit of a turning point. And depending on where you are, like the property market takes a bit of time. Makes sense. So if you're looking at a really, really bad property market, if you say over the next 10 years, we're probably likely to pick up and do really well from this moving forward. So I hope what I'm talking about here has helped you understand, okay, if I want to do really, really well, one, jumping in and jumping out every single day in the markets is not how it's going to do well. Now, I do that myself. I have short-term trading for income, but then I'm also, okay, I also understand that my big trades, like my recent trade that I had, did over like 1,000% return. I was in that trade for 2 months. So if you want to position yourself to make massive wealth, it's all about positioning yourself and then letting those trades go. And then by the time you meet 2 or 3 years, or over the next 10 years, there's going to be millions and millions and millions of dollars being made from the markets. And it's just how you position yourself.
This is a big deal. I'm hoping we called it right here. You have to take your best shot. I did it. A lot of technical indicators came together only in the last few weeks. That's why I put out this August issue early. And I tell people the last time I had a turn point this strong was in early October 2002 at the bottom, and we called that bottom right to the week in the newsletter, of the tech wreck. This looks like a top to me, and if it is, we got fireworks getting ready to go off, particularly in the first real crash at the top of the Nasdaq. The other markets already had their 40%. So there should be a big crash in the next few months to follow this. So stay tuned.
So there we have it, guys. One thing that Harry Dent was talking about, like the Nasdaq, as you can see that the Nasdaq right now, the Nasdaq is looking really, really, really similar to what actually happened in 1999 when it come to the crash, right? We saw a big massive blow off move in 1999 and it went vertical. Guys, whenever you see something vertical, look at 1999, vertical action, crash. Right now, vertical action, we're probably likely to see a crash. What happened with Bitcoin? Vertical action and then crash. When something goes vertical, life is all about coming back to balance. So if we're way too high, right, and things are just, if we're on drugs all the time and we're on a massive high and we're taking drugs and we're getting this massive high, yeah, this is amazing. What's inevitable likely to happen? A big crash to bring us back down. Makes sense? And when we're actually really, really, really low, guess what happens? We start to do things to start to pick ourselves back up, to try to bring ourselves back up to an even balance. That's where bubbles are pretty easy to see. The hard thing is when it's going to end, but then you know it's going to end pretty bad. So there we go, guys. That's what I think below. Let me know what you think in the comment section below. Hit the subscribe button, hit the like button, and all I do hope out of doing this video is to help you give a bigger perspective on how successful people really become successful. And they understand cycles, they understand the cause-effect relationships, which simply means they study people like Harry Dent, Mike Maloney, Ray Dalio, and they really study what has happened in the past, what are the cycles that happen repeating again and again and again and again throughout history when it comes to all markets. Then what are the cause, what they do, and what are the effects, relationships in the markets through here, and then also how can we start to incorporate that into the markets, and also what in history, you know, if you look at the tulip bubble, what happened to the tulip bubble? Big vertical move up and big crash down. Every single crash, every single bubble has one thing in common. It's massive vertical action, and then we have a big crash. Now, again, that vertical action, we never know when that vertical action is going to end. So that's always the hard part, is always trying to short that. But when you start to see where the bubble is and where the bubble's starting to get, and the bigger the bubble, the bigger the burst. So leave a comment below, guys. Hit the like button, hit the subscribe button, and I'll see you in the next video.